Ladies and gentlemen, it is that time in which we will take a journey into the multiverse with our Trader Talk segment today with chart trader Brett Manning. Good morning, sir.
Good morning, Jim.
So you laid out a couple of different universes in your morning note today, Universe A, Universe B, and then you had B1, B2. So why don't you recap this for us? You can give the Cliff Notes version if you like, just to get the
Sure.
listeners up to speed as to what you're talking about, and then we can break this down a little further.
Okay, so what I'm talking about is I think that this is genuinely important. To the extent that the trade war and its resolution is important, and to the extent that it's important to understand what people who are managing large amounts of money believe is likely. So there was something that was put out by China coming into the session yesterday and overnight before yesterday's open that didn't get a lot of fanfare, and particularly a specific dynamic of it I didn't think was really played up in the financial media very much, but I think that it gets right to the core of whether or not there is an unresolvable impasse in the negotiation between the United States and China. And that dynamic is, so we had this important moment a couple weeks ago where it was the narrative that had been played up in the media was that we were essentially on the doorstep of a signed deal. There were just a few little technical details to work out, more of a case of making sure that the grammar and spelling was right in the contract before everybody signed it. And then suddenly everything fell apart. And the narrative that we have been given is that a trade deal had been negotiated, and when the U.S. sent a draft to China for them to just look over and make sure it was okay, China reneged on everything that they had previously agreed to, and sent back a red line of that draft that basically took out all sorts of stuff that was important to the United States. And in response to that, we increased the tariffs more, and the whole negotiation has broken down. That's the sort of official narrative right now, but I think that most people are kind of trying to understand what really happened under the surface there. And, there's a couple of different possibilities. And so I've identified these possibilities, and particularly in response to how China has framed it, because China didn't initially respond to this in terms of saying, here's why this broke down. That didn't happen until essentially Monday night for us.
Mm-hmm.
And China's response was interesting, very, very interesting, because China suggested that when the U.S. sent the draft of the contract, of the deal, the whole framework that we would be adopting as a coordinated trade deal, that the U.S. essentially increased the price. They just said, you have to buy, way more soybeans and natural gas and stuff from us. And that in response to that, China then started to take a much harder line, and that's when everything broke down. That's how China is officially framing the situation. So in my piece this morning, I just wanted to identify the implications of that situation because I think it's really important. If you understand, in kind of like the tape composition model idea that I have, if you imagine just sort of like a money manager composition model of different people, the different realities that they might be living in. And one of those realities I call Universe A, where basically you say, okay, we'll take China's word for it. That's what happened. If that's true, here's the really interesting part. It means that there is not an insurmountable impasse, that we could have a trade deal in a few weeks. And that's enormous for the market, given the way that it has psychologically pivoted around this issue to such an extreme lately. If suddenly everybody believes we could have a trade deal, in a few weeks pretty easily, then the market probably takes off. And I think that there's a subset of people who probably do believe that China's just saying that this wasn't about forced IP transfer. It wasn't about massive subsidies. It wasn't about kind of building a dominant global superpower, and the United States trying to limit that. For China, the problem was, they were just forced to commit to buying too much natural gas over the next 10 years. And that's a negotiable item. That's easy to kind of iron out that difference. So the idea, if you live in Universe A, is, hey, we're going to work this out because nobody wants to continue with this situation over a few bucks one side or the other. We will find a kind of, compromise on how much China's committing to import from the United States. It becomes easy to manage in Universe A. So that is the implication of what China explained as the reason. Now, Universe B, and there's subsets here, Universe B1 and B2, is, I think, more likely, even though I think it's important to appreciate Universe A, which is why I posted what I posted earlier today. If you believe that there's plenty of people who may be living in Universe A in their minds about this situation, then when you see, sound bites from the White House saying, hey, we had a really constructive conversation, Xi and I are going to meet, you start thinking, in Universe A, that means this is about over. That means we're about to have a deal. But if you believe, I think that we're not in Universe A. So there's the possibility that this falls back apart for the people who live in Universe A at some point. They end up starting to realize that China maybe wasn't being entirely straightforward in their public narrative there. And so that's where you get to Universe B, and the subsets Universe B1 and B2. And, there's two possibilities here. So one of them is that the United States, so Universe B2 I'm going to start with, because this is the White House's narrative, that we sent them something that everybody had agreed to, that everybody had already basically set in motion as, here's what the trade deal is going to be, and China was on board with it, everybody was on board with it, the White House drafted it up and sent them a copy, and then China said, you know what, forget it, we're out now. We've changed our minds, we're not going to agree to all this stuff. And that would be kind of emphasized by the narrative that's starting to emerge of sort of hardliners in China that are starting to subvert President Xi's power and starting to take over the narrative. There is that possibility, and that's what the White House is essentially contending. But there is also Universe B1, which I think is maybe a little bit more likely, maybe the most likely, is that, and I say it in my notes as the U.S. is responsible for blowing up the deal. I probably should have worded that the universe is somewhat responsible for blowing up the deal. If the United States sent slightly harsher terms around things like forced IP transfers, and China didn't like the degree to which it would have to change the laws that it had in place, that it would have to regulate itself in an enforceable manner, it went too far for them on those notes, and so they sent back something that contradicted that too far back the other way for the United States, and things unraveled from there. And the reason why this may be the case is because China's not going to publicly admit to doing forced IP transfers in the first place. And the example I give is, if you have a trade war going on, so to speak, with your next door neighbor, and your next door neighbor, one of the things they're doing is coming over to your driveway every morning and stealing your morning paper. And you want to throw in there something that says, hey, you're not allowed to steal my morning paper. And let's say the neighborhood housing association, homeowners association, has a newsletter, and they start covering the deal that you're trying to work out with your neighbor. And then you have a deal in place, and the deal falls apart between you and your neighbor. And the newsletter is trying to figure out why. And your neighbor has a statement. Your neighbor's not going to say it's because your terms are too harsh about letting him steal your paper. Right? So there's going to be an implicit admission that they're unwilling to make, and it's been clear they're unwilling to make the admission that they've been doing these forced IP transfers that I think most of us agree they probably have been doing. So it seems likely to me that they're using the narrative of Universe A to explain how maybe the United States sent things that they hadn't fully agreed to, but they don't want to say that it was about the things that they're not really publicly, internationally admitting to doing. And so they scapegoat something like how much they're going to import from the United States, because they still want to blame the United States, but they can't really say why. So I think that there's a decent chance that that's the situation. But again, I think today we're seeing a great example of people overly hedged and overly bearish coming into the market open, just like yesterday. And we get this set of headlines saying, hey, there's more constructive dialogue going on. Mnuchin's headed over there. Trump's going to sit down with Xi. If for those people who live in Universe A, they better be buying, because the Fed is back on track to cut in September. Earnings growth is good. We have easy excuses to keep monetary policy really, really easy and soft and accommodative. And the trade war may be over in a matter of weeks. So if you're not buying now, you're going to get left behind. And I think that people who live in Universe A just are forced to just scramble in like crazy anytime they feel like there's a new channel of dialogue that's open. So there's the multiverse idea.
All right, and so if I'm hearing you correctly, you think we're most likely in Universe B1, so therefore we'll focus on that one a little bit. So in terms of how to trade around this, is it kind of a wait-and-see approach? So therefore, does it fall in line with what you were trying to do today a little bit, which is fade a rally here on the prospect that things will fall apart again?
So today it was purely technical.
Okay.
It was purely that I felt like we had started to leak back down within the zone of what I think that is kind of, the market is pregnant with the ability to flush out the 2800 level, and that was it. I just thought we could do that early today and maybe rebound later in the day. I feel like when we get close to that level, we're going to be able to push a panic, and we're going to be able to flush that whole area out. And I really feel like it wants to check down to that 2775 to 2785 area, where we have a much more interesting set of levels to bank on. So that was it. I don't think if for the idea of there being another downward leg that is purely related to the trade war, I think that you would need to get to the point where the veil is lifted on Universe A. And I think that would probably be something that could extend itself out until G20. And we get to the idea that, no, we get very clear signs. Now, they could happen sooner, but I think you'd need to see something that disproves Universe A. Because remember, Universe A hinges 100% on essentially the idea that China actually didn't have a problem with the language around IP transfers. Sorry, the lawn people are here right now if you're hearing that. But China didn't really have a problem with the language around IP transfers or subsidies or the world-building ambitions. And if that's true in Universe A, then it's easy to get a deal. My guess is that's not true. And it would take some kind of confirmation that that's not true. So we would need to get to where something comes along that shows that, no, this isn't just about how much soybeans China's going to import over the next 10 years. This is about a vision that China has of its long-term future, and the United States trying to contain that vision, and that there's a struggle going on, and the United States is looking to put in place something that the whole rest of the world agrees is a ratified legal agreement between the two countries that would constrain China's ability to do the things that it wants to do to achieve its long-term vision. So I think that most likely is the case, but there's a possibility that there's a bunch of people managing a bunch of money who don't believe that's the case now after essentially coming through Monday night and seeing how China framed things. So I think that it's about, if you're looking for downside related to the trade war, maybe it's going to be a little bit tough to get here until we see something that really pretty much directly undermines the Universe A understanding.
All right, so one of the listeners wrote in, I think it's an interesting question, and wanted me to ask you in particular if this is a win-win situation, that being the market expects a trade deal, so the market rallies. Market doesn't get a trade deal, but it does expect a rate hike, market rallies.
Yeah, no, I mean, I think that in the bigger picture, once you start, when the VIX gets up like this, when you have a single kind of catalyst focus, people turn into a big sweaty crowd of gamblers. And it's possible that we are over-assessing the importance of specifically the financial side of the China trade negotiation right now. Maybe there's bigger long-term geopolitical implications. I think there probably is that could be bearish. But as far as looking at what are earnings going to be like over the next 2 to 4 quarters related to this theme, you know, even in the way that it's being framed as kind of the worst case scenario right now, it's not that impactful. It really isn't that impactful. And if it does offer the Fed an easy excuse to not look like they're capitulating to political pressure from the White House, and to look like they're trying to foster something extra in the face of what is really manageable and low inflation, it's possible that this gives them an excuse to cut rates in September. The Fed funds futures are now showing at least one cut in September. There's some pricing 2 cuts. So I think that there is that kind of win-win narrative. You may have to withstand some volatility. But like I said with Gavin on Monday, these sentiment indicators suggest a little bit of a panic going on. That panic plays itself out. It probably does add up to a buying opportunity, and probably that's largely framed by the fact that, the more important, the bigger, more significant factor in all this is probably the fact that you have easy monetary policy in a situation where earnings growth is already strong, and that's not likely to be that impacted by the tariffs. So I think that this has just become a set of buzzwords. You've got a lot of people reacting to it in the moment, and probably overreacting to it in the moment. But that doesn't mean that you won't get some good trades on the short side if they're lined up right. But yeah, if you fade back, there is kind of at least a near-term win-win situation, I think, based on this sort of countering force of, every time things kind of conflagrate further with China, the Fed is put in a position to have an easier time cutting, even though it doesn't have that massive of an economic impact.
All right, and so you shorted today and you stepped out of the way, and that was really good timing on that one. My question then goes to, we had, I guess what we'll call a headline pop that you did not fade into. So therefore, are you waiting for something more, or do you think there's actually some substance behind what we saw this morning?
So so the reason why I would have faded that under normal circumstances, given the trend we see in the market and the fact that it's a headline-related pop. But again, I think it comes back to the fact that I'm appreciating after watching and feeling the tape that we had in play yesterday, that there's possibly a large amount of money that's overly hedged. We've talked in the past about how we haven't seen big money managers get that involved in this rally in stocks. So they've got a place where they, suddenly are able to get involved here. And if there is this kind of win-win narrative, just like the subscriber brought up, and they believe that Universe A is the case, that money's going to pour in. So I'm less likely to fade trade negotiation-related headlines right now until we've disproven Universe A.
All right.
Especially when you have a put call like we saw in play today. I mean, you brought it up. I heard you bring it up. It was 1.55. When I stepped aside from that trade, because if I'm going to get into that position based on early feel of the tape, it starts working for me. I got, a few points in the money on both. And then just the feeling of the type of orders that were coming in, and then we're heading towards Stephen Mnuchin, and, obviously the headline risk across the board, and we're sitting there with 1.5 plus put call. It's something I'm going to be pretty quick to give up on if I don't see exactly what I want to see.
Okay. Yeah, and that would have been my next question anyway. The put-call ratio is still somewhat elevated, 1.425 as we speak, suggesting that there could be still some upside, at least in today's market.
I want to point out something that's an interesting dynamic to appreciate.
Okay.
The put call 2 days ago, we had on the shortest time frame chart you can have of the put call, we had a massive gap to the downside where it dropped from about 1.29 to about 0.87 in a single trade.
Okay.
Okay, and that was early off the bell. So when the number of total contracts being traded was relatively small, which means an outsized, really big order, a single order from a single player, either buying calls or selling puts, would have massively impacted it. It was just half an hour off the open. So I'm going with the hypothesis that that's what happened, that we had a single very large purchase of calls, maybe, or selling of puts. Possibly selling of puts because of where the VIX is. So let's go with the idea that that was a single massive put sale right there that pounded down the put-call ratio. It doesn't necessarily say you should look at that as an indication of crowd psychology. It's a single massive order, but it depressed the put-call for that day. And I would like to point out that today, I believe that we saw that trade taken off, and probably for a huge profit, because you have another gigantic gap, but it was further into the day when there's a greater number of total contracts that had been traded, so the gap is going to be smaller even if it's the exact same size trade. So I think it all adds up to a single really large trader sold a ton of puts in a single trade on the 13th and then covered that today. So I think that the put call is being a little bit, it maybe isn't a directly a sensible messenger of crowd psychology with its levels right now, because I think that covering of that massive put trade has probably elevated the put call ratio a little above where it maybe should be in terms of reflecting crowd psychology today on this rally.
Well, that's interesting. Well, cross that one off the list of indicators for the day.
I mean, this is a crazy hypothesis.
I think it's valid, especially if you can.
Because we're talking about tracking a ratio.
Absolutely.
If you get a single big outsized trade, it will affect it disproportionately.
Yeah. So take it with a grain of salt today when we're looking at the put-call ratio. So hopefully, is there any way for you to kind of itemize that and see if the volume was somewhat one-to-one? At least approximately in the ballpark?
Yeah, I mean, I've kind of gotten there in my head already just by looking at an average sense of how, because again, this is a cumulative measure. As you get further into the day, you're dealing with a larger sample size, and so you're going to have a smaller and smaller gap. And the difference in time, this is about an hour later in the day, and the fact that it is essentially shorting a bunch of puts, so let's call it getting long the market, right? In a way, somebody was getting long the market in a big way in a derivative instrument on the 13th, right around the lows. And then we see this big headline pop and this really sharp rally. And this is after we had really exploded up through things. And suddenly there's this big order on the other side of it. And it just makes sense to me. It looks like, based on that it's further in the day, I can't perfectly quantify it, but maybe I would be able to with enough research, and maybe that's something I'll try to do. But I'm reasonably satisfied that it's either a data glitch or that's exactly what happened. It was a really uh, big strategy, and I'm guessing that it was selling puts and then covering that.
Very interesting. Yeah, one of our listeners
And a
wants to know.
highly profitable trade. A very, very profitable trade.
For sure. One of our listeners wants to know, did you get above 1500 on your SAT?
Actually, no, but I got a perfect score on the GRE.
Of course you did. All right. Well, let's move on to crude oil. I always want to talk about crude oil with you, especially after we had two big builds today.
Yeah.
And
I would just like to say Mike's trade was exceptional here.
yeah, for sure. And he bought that yesterday in the UWT. Mike being commodity trader, just
Right
for
in
anybody
front
who
of
doesn't know.
right in front of both data points, which was interesting. But he read it right.
All right, let me pull that chart up, and that way we can have a daily chart, and then we can have a smaller time frame chart in crude oil as well. Let me get this out of the way. There we go. All right, so where are we at as far as crude goes now? Looks like we're on the verge of breaking out into new high territory, at least for the day.
Yeah, right. I mean, I think that the significant point here is both data points were really bad and the market's up.
Mm-hmm.
So, I mean, that passes my tests. And it's interesting that he moved in front of them. He got the worst data he could have really gotten in both API and EIA this morning. And then suddenly, we're just rocketing to the upside. So that, I mean, I suppose that his logic, I'm sure he'll probably post on this, but his logic probably is, given the conflagration that we're seeing going on in the Middle East and the overall trends that we have in the data, we've got a situation where the market's been holding up. We've got that 50-day average on the continuous contract. We've got the 200-day. They both laced over each other, and we've had a range of support right along those levels, and then a sense that you're going to see some big commercial hedging come in and have to buy contracts here. If you run an airline, if you run American Airlines, and you see some of the stuff that's going on right now in the Middle East, you're going to need to be buying at a level. You're just sitting there, just soaking up supply as much as possible, because you need to be able to protect yourself against a huge spike in crude oil based on, a Cold War going to a hot war between something like Iran and Saudi Arabia. So you have to be hedged for that. And I think that's a lot of what we're seeing here is just this basket underneath the market that's just willing to collect as much supply as possible just as a hedge probably for commercial operators that need to be able to fix in place a price for their oil-based inputs.
You've been pretty quiet in crude oil lately, though. Any ideas that you're at least flirting with?
So, yeah, I mean, I almost put on the long after the data today, and I should have. And I was just too focused on watching when we get a VIX up, I just tend to get really kind of single-minded on equity futures. Mm-hmm. And I saw Mike's trade yesterday, and I saw the data that we had today, and I saw the way the market held, and I didn't pull the trigger, and I clearly should have. But, yeah, it would be a situation where I have a tough time saying, oh, here's the falsifiability level, and that gives me a risk-reward ratio that I'm happy with right now. But that was definitely something to move into on, the move above 61.35 following the data.
All right. So if you were to lean any direction, you'd probably want to see something, a pullback in the ability to get long and come up with a pretty good risk-reward. Is that fair?
Yeah, but I suppose that I'd want to see it on a headline if I could get it.
Well, yeah, that's what I meant. I guess that I right. failed to mention it.
Maybe,
someone implied.
My favorite headlines for oil would be Trump tweeting something. I'm going to call 1-800-OPEC and get them to keep the price down, something like that. And you see it kick down 50 ticks. That's something I would buy in a heartbeat right now. I wouldn't want to see that headline be about resolving tensions in the Middle East. I would want to see a headline about resolving tensions in the Middle East, generally speaking, as a person living in this world. But that's not something that I would necessarily want to immediately buy on, because I believe that a lot of the demand is coming from the assumption that it's tough to resolve those tensions right now.
All right, so here we are back in the NASDAQ futures. We're right around 7,500, just below it. And that was a level that you indicated not too long ago as a potential flush trigger level. It was a target and one of your shorts. I don't think that one worked out for you, but inevitably the theory played out. And so here we are back at that level. So now we got to call it a fairly key inflection point. Is there another level that you're looking at maybe in the NASDAQ? Or let me throw one other thing out at you. we grind higher to like 2,900 by option expiration come Friday, and then we get a sell-off. What do you think of that?
I think that you're going to have two-way volatility, and I think that it's tough for me to say in advance certain levels because I really get fixated when we get a VIX up to a certain level. I really get fixated on order flow, on my sort of tape composition model sense, and really short-term pattern structure, and just watching how the really short-term pattern structure handles certain types of orders. That's the fundamental thing that I do. And if the scenario matches, it gives me a certain bias, and I start to see that sort of dynamic build. I could be on either side of this tape, and I don't really know which level. Just when I start to see certain things start to happen, it's going to pull me into a situation where I want to be trading. And I really don't know right now where that's likely to happen. I suppose that maybe I would shift a little bit around the idea if we did get some kind of exogenous input that's starting to define a situation where we start to debunk Universe A for people, then I feel like that becomes a situation where I want to be actively shorting headlines, probably from the White House, using words like constructive, etc. Once we get past that. But while that Universe A theory is still probably in play for enough people right now, it's tough for me to fade those headlines. But that's a dynamic that I would really see as just cherry picking in this market right now.
But you could also see a scenario, at least I can, in which they crush the VIX over the next couple of days. We get back down to 13 or 14, and look, this thing moves lower quicker than it moves higher lately. They crush, especially with
Does it?
To
I don't know
me,
about
it does.
that.
Well, I don't
No,
know,
I
man.
disagree with you.
When
I see
option
spikes to the upside, grinds to the downside.
man, it seems like
Normally
on the
that's
week of
true.
option expiration, though, they just they when you have a week like this where I mean, look, we were at 19 or not 16. I mean,
Oh,
just
you mean the VIX does?
yeah, the VIX.
Oh, I thought you meant the market. Okay,
No, no,
yeah.
no, no,
Right.
no, the VIX
No, no.
itself.
You're, of course, absolutely.
Okay, all right. You were
Yeah,
scaring me
absolutely,
for a
yeah.
second. I'm like,
No, I would never contend
I gotta
that the
get,
VIX moves,
I gotta get
yeah,
into a
lower past
sparring match with chart. Oh man, here we go.
No. But I do think I was actually making a point that I think is really important for traders to appreciate. When you get a market where spikes are to the upside and grinds are to the downside, it's one of the reasons why I'm leaning short most of my setups. That's just a systematic bias that I have. When I see the market acting that way, it's usually not a good thing. So, I don't know where this is going to resolve, but over this term, it's another reason why I think eventually we'll get that 2,800 flush, because we are seeing, normally my directional bias has a lot of different inputs, but one of them is which way are the spikes and which way are the grinds. When you see spikes to the downside, grinds to the upside, that's a bullish situation for the market. Lately, we are seeing spikes to the upside and grinds to the downside, which is generally speaking the type of market that I want to short. But there's no question, you're absolutely correct. The VIX is going to move up much faster than it moves down.
All right, so where is there any other market? Are you still on gold GLD?
Absolutely.
Okay, so that's working out well for you. You haven't dabbled though in gold futures at all, so there really hasn't been any short-term setups, I suspect, right?
Yeah, no. I mean, at this point, I'm. What I want to see is this GLD position move to where we start to get within shouting distance of that super long-term, what I see as extraordinarily interesting kind of monthly chart or weekly chart ascending triangle that's been in play for, 4 years at this point. And if we start to move up into that, I mean, what are we looking at? The 1350 area. If we get back up into that neighborhood, then I think that we're going to have like a 50-point day on a breakout. And, that's when I'm going to start getting more aggressive probably with the futures side of it.
All right. Any other markets that we need to hit on before we check out for the day?
So, one last thing I want to say just about equities and about the whole China situation. I think that the White House is clearly, there's another reason why I think we're seeing such a rally today and why I'm hesitant to short it. I think that the White House is doing something pretty smart right now. We've seen a lot of messaging around the idea of, hey, we're not going to be in a trade war with Europe. Hey, we're not going to be in a trade war with Canada. Hey, we're not going to be in a trade war with Mexico. So it's basically starting to put out this sense to the markets that everything is now just shifting right to China and only China. It's not going to fight wars on multiple fronts with trade. And it also says, the narrative isn't crazy old protectionist Trump team. The narrative is China is a bad actor. And they're trying to focus that. And it also basically pushes the stock market higher, which is clearly important too. As we discussed last week, a crashing stock market directly emboldens the hardliners in China because it suggests that they can impact President Trump's popularity, public perception of how he's doing, public perception of the stability of the U.S. economy, all sorts of things. If they feel like they can impact that with their own retaliatory measures, then they're more likely to do much more retaliation. So the White House is definitely in a situation where it wants the market to be higher, and a good way to do that is to say this isn't a crazy protectionist thing that we're going to do against the world. We're trying to resolve a situation with China, and we're going to go ahead and take the pressure off Europe, take the pressure off our North American neighbors. They're doing a good job, I think, of doing that. That's a smart move, and I think the market's responding to that well. So that's one other thing that I would highlight.
All right, so I suspect you're going to remain somewhat quiet unless we get a headline. Fair?
It depends. Again, I mean, we've got to fix up enough that if I just see the right types of dynamics present themselves in terms of the way the market is behaving, in terms of the short-term patterns, then, I'm fully willing to take scalps in this tape.
All right. Well, if that's the case, my man, I'm going to leave you on the line so that you can call out your trade directly. I know they love it when you do that. So that will be the MO for today if you're willing.
You got it.
All right. Thanks a lot, Brett, as always.
All right. Thank you.
Thank you.